Good morning, Chris here with OptionMillionaires.com with a follow-up on my analysis that I did for Apple on Monday. So with Apple, I was basically saying on my Monday post that we are in a large 5-wave Elliott wave sequence, which all puts us, it gives us a, get rid of this right here, it gives us resistance levels at around 656, or that would be support right now, and it gave us a target for an ultimate top here at about 669.20. Now, yesterday's movement, it all but has me convinced that we had pretty much topped. So yesterday we briefly broke above that point. We got up to 674.88, and then by the end of the day, moved down an entire 2% from where that was. So what do I actually believe is going on with this stock? So first I want you to look down here at the volume. Now, I'm just going to ask you to eyeball it. There's a couple strict definitions that we can do to identify a volume spike, and what we need to know is that when volume spikes, it's either the beginning of a new move or the end of a new move. So, for instance, and let's just circle a couple of these spikes. So, there's a spike right here. There's a spike right here. Could we call this a spike? No, I want to be more defined. So I guess that we could call this a spike. And if we move back, let's go to a year. And zoom this in just a little bit so we can see it. And we could call like this a spike here. Just these obvious bars that just stick out from the entire chart. So here's one right here. Okay, so if you notice, at these points, it usually signifies, like over at this spike right here, the market gapped down, and that's where it ended. It was a post-earnings gap, but it was such a spike on high volume that there were many shares that traded hands, and eventually the buyers came into control. Now, we move back, we see that this spike right here was, I think that was a gap, so that one signified the start of a move. Now, this one signified the end of a move. And then back here, this one signified the start of a new move. So if we're actually saying, okay, we are at start of a new move with this spike, or the end of the old move, then we would expect it to go down from here. So if I just do a couple Fibonacci brackets to get some possible support and resistance levels. So I will do those two, and then I will do this one. So what we're getting right here is that we're going to basically have support here around 33.88, and we're going to have, that's going to be a semi-weak support level, and then we're going to have very strong support around the 610 level. And if it breaks through that, then we'll pretty much know that the uptrend has been reversed in Apple. So 633 and about 610 are going to be our main support levels. So I got that out of the way. Now finally I want to talk a little bit about Japanese candlestick analysis. So pattern is very typical in Japanese style technical analysis, which has been around for centuries. This pattern right here, we would call it a one-day pattern that we would call a dark cloud cover. And as what the name suggests, it means that there might be storms ahead. So the what actually happens in this pattern is that a stock or a market opens higher than the previous day, but then it closes beneath the halfway point of the movement in the previous day. So what that basically means is that there were enough buyers to get the market up, but then suddenly we had a lot of sellers step in, and they were able to push the price down. And actually, I was talking to a couple people on another trading forum the other day, yesterday, and a couple of them were algorithmic traders, and they said that the institutions around, as soon as it broke below 665, they said the institutions were dumping the stock. So it might be the start of a new move down, but according to the Elliott wave analysis, it says that it's the end of the entire move. So be careful with this one. If you want to go long this stock, if you still want to get in, I would certainly wait until it can make new highs by breaking above about let's just say 680. All right, thanks for watching and have a good one.